Hey, what's up guys? John here. Get out of credit card debt explodes on Google Trends. Look at this. This is just off the charts. This is dating back all the way to 2010.
Credit card debt in America has reached a new high.
The amount of debt Americans put on plastic is the highest it's ever been.
For the first time ever, the total credit card debt across the U.S. has topped $1 trillion.
Now, when you look at what's happening right now in the economy,
credit card debt delinquencies are taking off. New credit card delinquency rates have surpassed their pre-pandemic level.
You're going to see where the pain's at, but where the big opportunity is going to be coming for new investors, entrepreneurs, and people looking to make really big moves over the coming couple of years. I think we're in the greatest economic rug pull in American history. I think this crash will be far greater than 2008, bigger than the dot-com bubble, bigger than the crash in the 1990s in real estate. It's going to be worse than all three of those likely combined. We're witnessing the great wealth transfer. And if you're looking to take advantage of it, pay very close attention to what lenders are doing, what banks are doing, and what's happening to America, and I'll break it down for you in this video. Please hit the like button. Hit the like button. YouTube will share this content to educate more people about what's really going on in America. And if you'd like to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So, U.S. credit gets downgraded as a sign of default, right? We've known this, right? But this came out a couple days ago. But what they said is that the dollar has lost more than 17% of its value since Biden took office. 17%, right? Pretty substantial, especially when you realize the state of the American consumer, the state of what's happening in the world. We're going to print more and more money. There's going to be more money brought into circulation in the coming couple of years, meaning that the fall of the dollar is going to continue to get worse. We're going to start to see a situation in which our currency continues to erode. And if incomes are not going to rise at a rate that's greater than the erosion of the currency, it's going to be a problem for living standards in America. Now, when you look at what's going on with defaults on consumer credit cards, you're starting to see this really starting to pick up here. Now, I believe this is going to pick up a lot over the next year or so. You have student loan crisis, 43.5 million Americans that have started paying their student loan bills October 1st. Average payment, $503 a month. This is substantial, right? 2 out of 3 Americans don't have $400 in the bank. So you start to look at this, how are they going to pay over $500 a month every single month if they don't have $400 in the bank today? Right? It's not going to happen, right? You're going to start seeing people make decisions. Some of those decisions will be not to pay their credit card, not to pay their car note, not to pay their landlord, not to pay student loans, but decisions will be made and people will be prioritizing themselves over their obligations. They're going to want to feed themselves first. They're going to want to, make certain bills first before they pay their credit card. And so because of this, banks and lenders and credit card companies are paying very close attention to who's defaulting, who's not defaulting. So borrowers with a Vantage credit score between 300 and 600 across 4 cohorts experience an 8.9% delinquency rate of 30 to 59% in July, right? From 7.49% a year earlier. So you can see that more than likely at this rate, it's going to went from 7.49 to 8.9. It's probably going to go north of 10%. I would bet, January, right? We're going to continue to see this climb. But with borrowers with a credit score between 661 and 780, it was 0.01%. Who would you lend to? Who would you lend to? If there's 2 pools of people, one between 300 and 600 credit score, and the other over here, one had a 9% chance of not paying you back, or the other one a 0.1%, who would you lend to? Probably the 0.1%, right? So what I think is going to happen is they're going to say, you know what, 661, nah, the average credit score is 698. We're going to go 730, 740, 750 scores and above, right? That's what's going to happen. We're going to continue to see lending and credit continue to tighten up. Now look at what people are searching for. Bank or balance transfers for credit cards. People are looking for ways in which they can get out of credit card debt without defaulting because they don't want to ruin their credit, right? And I don't blame them. Who would want to ruin their credit? There are ways to do this with balance transfer credit cards, but this is also going off the chart. And I think that what we're going to begin to see happen is a lot of these balance transfer cards are going to start getting pulled. And why is that? Well, because they're going to be really careful with who they're going to be lending money to, and they're going to continue raising the standards of these cards. Right now, these are some cards, you need good or excellent credit to get approved, good, excellent credit. You're going to need these credit scores to be able to get approved for these cards. But if you have 20 grand in credit card debt and you're paying some credit card company 25 or 30% interest, it's going to be nearly impossible to get out of credit card debt. If you use a credit card interest calculator and you type in how much you're spending with interest, how much you owe, and what your minimum payments are, your monthly payments, you're going to see how long this will take to get out of debt. In many cases, it will be decades to get out of debt. And people are looking at this saying, you know what, forget it. If I can get a balance transfer card, I can get out of debt in 2 years or 3 years versus 20 years, right? But look at this. This is what you want to pay attention to. You want to look at what investors are doing and what's happening to the economy so you can position yourself for what I think is going to be a massive opportunity. So investor purchases of U.S. homes are falling quickly and now at 2008 levels. In Q3 2023, investors purchased $36 billion worth of U.S. homes, down 30% compared to 2022. In many large cities, investor purchases are down well over 40%. Atlanta and Charlotte, home investors, purchased 50% less homes. We now have a 20-year high interest rate on, and with how high housing prices are, right? So you're looking at this, and you're looking at an interesting trend here, dating back, we'll go 2016. Every year, walking into the winter, inventory goes down, right? Inventory goes down every year during the winter, right? People don't want to move during the winter. They want to move when their kids are at school. And you have to ask yourself, if every winter inventory is going down, and now we're in the winter and inventory is going up, why is that? Why is that? Is it because people, they need to get out of their home? They're looking at the economy like, hey, you know what? This is as good as it's going to get for a while. I need to get some cash out of this house. I need to get some money in my pocket to weather a storm. That's what I think. I think a lot of people are looking at this saying, hey, you know what? Maybe I'm not as rich as I thought I was. Maybe I need to put a little cash in the bank. Maybe I need to put myself in a position to invest and buy distressed deals. Maybe I need to do these things. And when you're looking at this, then you start looking around at what's happening. You have used car prices. They fell 5.5% over the past 12 months, right? Used car prices falling. You have auto loan rates for used cars, at a 20-year high. 20-year high. Who's buying a used car right now? I did a video talking about this that went pretty viral, 550,000 views 2 weeks ago. A lot of other people took this topic, even took the same headline and did the same exact video talking about this. It collectively got millions and millions and millions of views, talking about give back cars exploding on Google Trends. 10,000 likes, right? Then you look at what's happening with luxury cars. Luxury cars, luxury watches have declined 18% in the past 12 months. And U.S. existing home sales slump to more than a 13-year low. So here's what's happening. You have foreclosures on the rise in Indiana and all across the U.S. And you have banks reporting tighter lending standards for mortgages and home equity lines of credit in Q3, right? So banks are looking at the writing on the wall. They see problems for consumers. They see problems for the economy. They see interest rates at all-time highs, and they see a lot of debt that needs to get rolled over, both in corporate debt and in commercial real estate over the coming couple of years. They realize they're going to be suffering a lot of losses, and a lot of the loans that they made over the last couple of years are probably going to go south, right? So what are they going to do? They're going to continue tightening up their lending standards. And as that happens, everyday American consumers that are used to an easy monetary environment aren't going to have access to that liquidity. They're going to be forced to sell. That's what's going to happen. The next year or two, we're going to see so much opportunity to run out there and buy watches, cars, buy land, buy houses, even grow and scale businesses, because a lot of the businesses, a lot of the areas in which maybe you want to start or grow a business, a lot of your competitors might walk into hard times the next year or two. This could be a big opportunity for you to grow market share. We're walking into some really uncertain times, and I think we're walking into an environment that many people are not yet ready for. Many people think that, hey, you know what? We've had a great economy for 15 years. Everything has always been great. Everything goes up. Stocks go up. Real estate goes up. People aren't taking this seriously. But when you look at what's actually happening, you look at what, Bezos unloading stock. You look at Jamie Dimon, CEO of Chase Bank unloading stock. You look at all the top executives unloading stock. Airbnb execs unloading stock. Zuckerberg unloading stock. All these wealthy people all doing this inside the last 90 days. Why? Because they know a lot of pain's coming to this economy and a lot of opportunities coming as well. And they want to cash out at the top to sit on a mountain of cash to go out there and buy up America. That's what's happening. We're walking into the greatest wealth transfer of all time. Facts are facts. What do you think about this entire situation? Drop below. We'll have a conversation about it. And if you're in credit card debt, maybe you're in a bad situation right now, but you want to take advantage of this great wealth transfer, the best way to do this is to A, make sure that you're getting out of high interest rate consumer credit card debt. Put yourself in a position to where if you were a bank, you would want to lend you money. put yourself in a position to get access to money. That's what you want to do. If the dollar's falling at 17%, it's already lost 17% of its value over the last couple of years, what do you think is going to happen over the next few years? Right? You're going to want to put yourself in a position to where you can go out there and buy hard, real assets. Put yourself in a position to grow wealth. Drop below. Let's have a conversation about it. If you'd like to fix your credit to position yourself, we'd love to help you at my company, GreatCreditFast.com. You can click the link in the description and schedule a free strategy session. Catch you in the next video.